What's going on, guys? So I'm going to be doing a little bit of a market overview here for what we've done for the past week. I've had very limited positions, but that's kind of what you need to do in this market. Opening several positions on end is not very optimal especially with an elevated VIX. It's going to be really, really, really decaying your options if you're in the midst of that whole entire volatility crush. And yeah, your P&L is just going to fluctuate and it's going to kind of screw with you emotionally. And yeah, so I want to talk about this week's opening gap range, and I also want to talk about kind of how whenever you get this very, very, very fast sentiment flip where, okay, we're trending higher, it looks like we might need a recorrection lower, and then we get this really massive 3-day gap down. These never end well in terms of chasing short, right? It never, and if you guys have been trading long enough, you should know this by now. I don't want to, sound rude or anything, but you should know this by now that one, two, and then three consecutive gap down days is a horrible time to be looking any way short, right? And this is also kind of driven by the Nasdaq, right? It's driven by tech. Let's use basic common sense here, guys. It's driven by QQQ. QQQ did the same exact thing. Let's go take a look at QQQ, and here we are, right? We had a Thursday price action that's we kind of sold off from, right? We sold off of this gap that was created from over here on July 23rd to July 24th. We never fully sold off on it. And then we get this consecutive 2-day gap down, right? And this is actually into a new week, right? Futures futures they are, they're getting into a range where this is a very extensive gap down, right? It's into these gaps, these previous bull gaps, right? So that's one thing that you really need to take note of, right? So when you're going to 15 and you're taking a look at this Monday open, you're like, oh my gosh, market's so bearish, man. What's going on over here? Um, and then what happens is we open right on that bull gap, and then we start to rip, right? Now we do have data this week. Data is a liquidity driving type of tool. It's a liquidity driving type of event, right? So there's going to be more and more and more participants within the market. I always kind of mark out my wider perspective of levels over here. I'll give myself like the previous breakout level on the S&P. That would be 448 to 448.64 up into like this gap range over here, right? So this is also kind of in confluence with what the whole entire Friday closing price into the Monday opening prices gap is, right? So it's a very critical spot in terms of looking for one, a relief right off the open, right? And then if they want to take this for relief early week, we have data on Thursday that moves price, right? So you have to think about this, guys. What builds an auction? It builds through higher lows. It builds through trap traders from one particular side. It builds from a lot of things that happen where you have to look at the wider perspective of it, right? You have to look at the wider perspective of, okay, we're gapping down into these previous bear gaps, right? So these previous unfilled ranges that need to be retested, and then we're reversing, price is reversing, and we're getting these really strong rips higher, reclaiming the upper ranges of these gaps, yet we have data end of week, right? So whenever you see the distribution, micro distribution happening on lower volume Wednesday, and it's right on smack dab right on top of that gap once again with really, really heavy volume coming in off of these lows of filling these gaps. What do you think is likely going to happen here, right? You're taking a look at this and you say, oh my gosh, okay, we're ripping right off the open, and then we sell back on top of the gap, and then that puts in a higher low, our first higher low. We get into the Tuesday session, and then we start doing the same exact thing, and then we start grinding our way higher. However, we get a gap up. That gap up is into the entirety of the gap fill on the new week opening gap. So the new week opening gap is from Friday into Monday. That's closed, right? And then what happens Wednesday? We sell right off the new week opening gap as well as this previous like range of a breakout from the S&P itself. What is this starting to look like? It starts to look like one massive breakout, retest, failure, retest, and move lower, right? So you need to understand that a lot of these traders are going to be offsides because we're gapping down into very critical ranges, right? We have a swing low established on a lot on the ETF itself of tech. We had it in Nvidia. We had it in a lot of these charts where you're gapping down, but you're gapping down into these very critical ranges, right? You have this other gap right over here. This was the gap, the earnings gap actually of Q. This was actually, yeah, so this was Q2. This was Q2 of 2020. Wait, is this Q2? Yeah. Okay, they don't have their earnings scheduled yet. Okay. Sorry, I had a brain fart there for a second. But yeah, so this is a retest into what the previous kind of like where the previous all-time high was, right? Before we got the breakout from the earnings itself, and then we retested down into it, we reclaimed the 95 range, and then we started to move higher off of it. Now, where are we moving higher to? We're moving higher to closing the gap up here, and then we sell off. What are we selling off for, though? We're selling off for our initial higher low, our first substantial, very strong higher low, very clear, constructive higher low, being placed within the new week opening gap before we can move our way higher and kind of have this whole entire data set being accumulated, right? It doesn't matter if the data is good, bad, whatever. It's just the alignment of a major gap down into a bull gap, it's reaccumulated, and then it's kind of redistributed right into midweek before data. Sentiment's very bearish, right? We're failing previous ranges that are very important, what looks to be 448.64, and it's just all a simple higher low on lower time frame perspective, right? So here's the gap. Here's the new week opening gap. Here's the fill of the gap. Funny enough, that's Wednesday. Tuesday also caught a lot of people off guard, right? And then it gaps up higher, and then it collects more liquidity on the gap up higher because now you have people chasing upside. So it's a spire, it's a domino effect whenever these things all happen, and they really all start to align. And then what this does is it finds its first initial strong constructive higher low right over here, right? Right off of the range of like where the 618 would kind of be, discounted range 436 to 433. If you want to take it all the way down into here, that's kind of like where the 618 was bouncing out in after hours. If you want to take extended off, by all means do so. That's equilibrium. If you want to go over into NVIDIA, you can take a look at these ones and start seeing how very, very, very important equity to be holding up the market here would be something like NVIDIA, right? Off of filling this gap, it would ideally want to maintain some strength, right? And then you take your weekly low to weekly high, and you kind of look for your discounted range, right, with daily closures back above the 102 range. I actually built a very nice long side trade on the close of this day and then built that into the 618 with risk being off that range the next following day. This was a really nice hold of the 15-minute chart on the 15-minute chart before we did climb our way higher. Keep in mind, this is also kind of like your 15-minute support right over here, right? So we swept it, we held it with a hammer, and then we just continued our way higher all the way back up into like upper ranges of where the week, um, not necessarily with NVIDIA, but almost there, right? So this was a really nice long, about $7 of a long, $8 almost actually. So that's really all I really wanted to emphasize in terms of flipping bias very quickly. You would always want to lay off the short exposure down here. You would always want to lay off the long exposure up here towards the upper ranges of where the previous week's close was, where the gap is technically quote unquote closed at, right? That's very important. There's ways in which other people look at this. Some people mark out the gaps and they look at like ES and NQ. I'm not really a big fan of that because I think it just brings a little bit too much noise to the table. But this is kind of how I've been viewing the market ever since Monday really even started, right? I was initially looking for obviously some sort of reversion trade to the long side, that being Nvidia. There was a couple others on the table that were also really, really nice. If you take a look and flip through the tech charts, you'll be able to see them. AM, or I'm sorry, Meta was a really, really, really nice trade. There's been a lot of them, right? So I would say the cleanest charts of them all were likely Meta. And yeah, so Meta, Nvidia, But the VIX and the volatility crush was really, really, really in the way, right? We had a really elevated VIX on Monday, where VIX actually was up at one point from Friday into Monday. Here's the close on Friday. Here's the open into Monday. This is 181%, it looks like. So that's a very substantial. That's going to take a big effect on options, right? And your options are going to move like shit. So even not trading this week is also a really good idea. And this isn't the best example of weekly opening gaps. It's not something that, you know, has a very systematic approach to it just because of the fact that options are very elevated and it's not the greatest thing to really be, executing around times like this, but it really does start to give opportunities, maybe even for the next following week, waiting for the volatility to cool, or maybe just taking some very tight risk exposure on some options. So yeah, that's kind of how the trades went early week. I also had some other trades. I had some SPY longs, SPY shorts, same general thing, same general concept. Some QQ longs, some QQQ shorts. QQQ longs were kind of established right off the gap alongside NVIDIA, and then I kind of held this, and then I resized in this off of equilibrium once again. And I still have some time actually on QQQ. I'm definitely not mining this weekly close and kind of having some time built off of a position right over here. Do I think we can move our way lower before Q3 and Q4? I definitely think it's a possibility. But whenever I look at this from like the weekly perspective, I look at the close, I look at like the trap and then the grind higher on really heavy volume. It really starts to signal to me that a lot of sellers were kind of matched there in very large amounts, right? So anytime there's a big seller, and then you start seeing that seller kind of reappear right off of the gap, and then he sells. That's a lot of effort from sellers right over there, but the volume is diminishing, right? That's kind of their power, their force kind of weakening, and the fact that all of this range is potentially absorbed from sellers now because we traded price action completely and thoroughly through it, then this could start looking like potentially a long side trade, right? So volatility crushed, right, as we were expecting. I did not expect the gap up to be that crazy, but it kind of reset. It's kind of back into more manageable ranges, so we can take um, some very nice opportunity off of that. There's also a couple other charts that are really starting to set up in the tech market, in mega caps, in large caps. So I don't know. We'll have to just kind of wait and see for what there is in store over there. Um, there are some other really nice charts. I'm not going to really get into them too much yet because I want to wait and see kind of what um, data I can collect into the next week. But yeah, that's kind of just how I was viewing the market this past week. It was pretty much just selling options is also a very good way to really approach this market, especially whenever the VIX does things like this. It's going to affect options very negatively, right? So trading was more vulnerable on basically Thursday and Wednesday, and a little bit better at those times. But with an elevated VIX like that, there's really not much more you can do other than sit on your hands or take the risk involved with what you can understand is a very elevated volatility index, right? And then obviously from there, um, be very picky, be very cautious, and trade the volatility, but trade it with tight risk exposure, and definitely understand that you need to be catching moves to get paid in this market, right? It's just kind of how it works. Options don't always move the same, so you have to be very careful with that. And yeah, so very short recap here. I had some other trades I could definitely go over, guys. It's just it's a little bit it's just a little bit like I don't know. I don't know if you're going to be able to understand these things. It's a little bit harder to explain how I'm seeing and viewing the tape, how I'm seeing and viewing kind of the dispersed equities that are looking to make their way back into obviously performing well, right? And I think one of those can definitely be Nike. And what I'm more and less looking for is just optimal fills on very well established companies that whenever the market bleeds in a really dramatic way, I'd be looking for kind of like some of those names to start playing a little bit better after the recovery happens. And that was kind of my thought process with Nike. As you can see, we've been in kind of like a four lower low ever since earnings. We've had one, two, three, four, five lower lows, and every single lower low was successfully bought. Was it on the prettiest of volume that we would ever want to see? No, but one thing I will have to say is if you go take a look at the S&P and if you go take a look at like Nike, um, it created a lower low this day, the day that the S&P absolutely shit the bed. And then ever since that, if you go to the 15, we had a really nice strong tape the next following day. And what this really did was kind of rip off of a lower low being established and then have a really weak sell into the close. And then we ripped on heavy volume again and quite nicely the next following day, right? So I took some ads on this day and then I sold them up into here. And then obviously this was the close of this massive gap over here that was created from last week. And then I re-added my Nike exposure and I had a really nice move back up into this range over here from down here right off the open. So like 73.30. Stops were kind of just right off the opening print or 73 itself. And then I took this back up into 74. And then the next following day, I overnighted that and I got up into 74.55. I did think we would have a little bit better of a day within the market. Um, I knew we were going to close this gap, but I thought we were going to test into this one all the way up here, right? So that's where I kind of messed up on a little bit. Not the biggest deal in the world. I did also long SPY here today. If you want to take a look at like how the SPY chart kind of looks, what this was the micro distro that was happening that never filled the new week opening gap on SPY, right? And it sold it off really hard right into the close on Wednesday, and then they accumulated through data the next following days. You could see the 8:30 candle right over here, boom, major pop. And like I said, this was all kind of a higher low within this massive gap over here. If you take a look at this from the regular trading time, you can kind of see how this is the gap that goes all the way down into here, guys. So yeah, if you want to take a look at like previous days, opens, stuff like that, you could take a look right over here. And then obviously that's whenever we get the data, open up Thursday, hold this range right over here, which was Wednesday's close, which was the gap up that led to the redistribution, which then led to higher time frame reaccumulation, and we gap back up in the range. We hold 522 and we move way higher. Um, Really beautiful trade, and was still long over here, long the market. And then we kind of closed off, opened the next day. I was long QQQ. QQ got a really nice move. I still have time on those if you guys have been following me at all in the Discord or whatever. But yeah, we kind of got this on Friday. We got a really nice strong move off the open, and it was kind of all just waiting to get up into here into 533. And we got a higher low right over here. So what my risk was on this position was going to be the opening print, right? Because I noticed it was defended and I noticed sellers really couldn't take it beneath. So I was like, you know what? This is beneath the previous day close is the opening print, right? So it's a little two level kind of confluence there. Um, we got our first initial higher low, and I was long here, and I trimmed, and then I sold a little portion, and then I got IV crushed on the retest, and I was like, fuck, I'm down. I re-added a little bit, and then took it right back into the initial target all the way up here towards 533. It actually got a little bit past that, but no gains were anything crazy. Um, so yeah, that would be it for tonight. That's just kind of the trade. I did lose on a McDonald's trade too. Um, but that was just a profit roll from the previous position. As you guys know, I've been like ultra bull on McDonald's. And I actually was good in the trade, but I was looking for the breakout, never got the breakout. So small loss here, but it was a quick sweep on Thursday, and I was pretty much long the whole entire market. So quick sweep Thursday and hold of that big support, and then it looked like we were going to break out. and I was long right over here, and I caught this really nice move from like probably $3 or $4 on it, and then it never truly got the breakout, and then it sold off today. So it is what it is. Don't really know why it was relatively weak today, and the volume wasn't even actually large, so it's probably just kind of getting the EMA reversion back down into like, I don't know. If you want to take a look at the EMAs, you can, but that's probably what it's doing. I do expect us to see some upside, and it was just a profit roll because I was kind of speculating and front running the breakout happening, right? So definitely not a big deal there. I also within the Wednesday redistribution, I did end up shorting Meta. And why do you guys think I actually shorted this? Well, we have an earnings candle right over here. Obviously, this was gapped up and then it was sold off on right on Thursday. And then Friday we got a gap down. Obviously, that led into Monday a gap down, which the whole entire market ripped. So not anything like too crazy there. Um, and one thing that I will have to say is whenever the volatility index explodes like that, you're going to have a lot of ETFs and like volatility indexes, um, a lot of like leverage ETFs, stuff like that, they're going to be getting the most trading volume. So this is a really nice recipe in terms of like diminishing volume back to the upside. And where is this specifically into? If you guys actually can answer this, I'd be, I'd be proud of you. I don't know if you guys can answer this. It's not even marked out on the chart, but where do you guys think this is kind of moving its way back into? Obviously, it's a 510 psych, but there's a more important and more key range that we're looking at over here. It was the range of, first of all, this little UTAD over here, right? So this is a massive move higher that looks like it's faking out a lot of traders, right? It's a really nice increased volume move. And then obviously that leads to like exhaustion off of the top, and then we actually have a breakout failure. But what I've been talking about is the gap, right? So you take this little gap from over here, and that is a very important range for sellers to then protect, right? They marked the inventory right above into to collect like more seller inventory off of this range, and it was kind of a collected and sold off on, right? They found the gap up, I guess, a little bit attractive, and then from there, if you go into the 15, you could start to see how it's like, I cannot talk today, man. You could start to see how this is like a gap up, right? And it's kind of moving its way higher, not any sort of crazy volume. And then what it does is it pushes its way right back into like, first of all, the opening print range of like the earnings candle itself. Well, not opening print, but orb range, I should say. And this already covered this whole entire territory, right? So whenever you go to the hourly, remember how I say the draw is always going to be to these candles that are very widespread, that kind of reverse price. Well, that's obviously the case, right? And then same thing, but more of an internal structure, right? So you're looking at this from both ends, higher time frames and lower time frames. And that's exactly what Wednesday was, right? So once we got beneath the opening print is whenever I took my stab short. And I was really paying attention to like the 15. So right over here. And then I took this really nicely back down into over here. This was one of my targets, which was a reclaim of the new week opening gap, right? So this is the new week opening gap. It's a really nice reclaim of it, and then a push higher, right? That's why you always have to respect and really check out those gaps that are very important. So, yep.